Let us take a short quiz to test our understanding so far. A draws 1000 per month on the last day of every month. If the rate of interest is 5% per annum, then the total interest on drawings will be A 325, B 275, C 300 and D 350. Come on, quickly make the computations. Fixed amount on the last day of each month. We don't have to compute for 12 months. That is a shortcut formula. What should it be? It should be amount of 5% is the rate of interest on the total amount of drawings during the year, that is 12 months. Since he takes it at the last day of each month, it should be into 5.5 months, no? 5.5 months. 5.5 by 12. So what do we get now? This would come to 5.5 into 5. Amount should be 275. The correct answer should be option B, 275. A and B are partners sharing profits and losses in the ratio 4:1. C was a manager who received the salary of rupees 2000 per month, in addition to a commission of 5% on net profits after charging such commission. Profits for the year is 3,39,000 before charging salary. Find the total remuneration of C. A 39,000, B 44,000, C 43,500 and D 38,000. The profit is 3,39,000. Salary is 2,000 per month. That is 24,000. Now you have 3,15,000. What is 3,15,000? 3,15,000 is the net profit before commission. Net profit before commission. Now what is the commission? Commission is 5% on net profits, but after charging such commission. So let us say, let net profit after commission, after charging commission, be equal to X. Okay. If that be the case, what is commission? Commission will be equal to 5% of X or 5X by 100. Therefore, what will be the net profit before commission? Net profit before commission will be equal to X plus 5X by 100. Yes or no? So, net profit before commission is X plus 5X by 100. Remove commission, 5X by 100, and net profit after commission is X. So, if I get this, I get 105X by 100. Net profit before commission, I have 3,15,000 here. Net profit before commission, I have 105X by 100. So, equating and solving, I get 105X by 100 is equal to 3,15,000, or X is equal to 3,15,000 into 100 by 105 equal to 3 lakh. So if the net profit before commission is 3,15,000, after commission it is 3 lakh, it means commission must be equal to 3,15,000 minus 3 lakh equal to 15,000. So what is the total amount? Total amount would be salary 24,000. I'm writing here salary 24,000, commission 15,000. 39,000 would be the total amount. So A 39,000. Correct answer should be A 39,000. Next. In the absence of an agreement, partners are entitled to A salary, B commission, C interest on loans and advances, and D profit share in capital ratio. In the absence of an agreement, partners are entitled to salary, no. Commission, no. Yes, they are entitled to an interest on loans and advances, yes. Profit in capital ratio, no. They are entitled to a profit share in equal ratio. No salary, no commission. So the correct answer in this case should be C. Next, fluctuating capital account is credited with A interest on capital, B profit for the year, C remuneration to the partners, and D all of these. Correct answer, all of these. Fluctuating capital account would be credited with the interest on capital, would be credited with the profit for the year, remuneration to the partners. Fluctuating capital account is credited with all that the partners will get: interest on capital, profits, and remuneration. Correct answer D. Next, interest on partners' capital is A an expenditure, B an appropriation, C again, D none of these. Interest on partners' capital is an appropriation. It is a distribution of profit. It is an appropriation. Next, A and B are partners having capitals of 50,000 and 60,000 respectively. Interest on capital is given at the rate of 5% per annum. Profits for the year before appropriation is 4,600. Interest on capital to be provided out of profits. Interest allocated to the partner is A 3,000 and 2,500, B 2,090 and 2,509, C 2,500 and 2,091, and D 600 and 300. This is what the interest would be to A and B. Interest on capital works out to 2,500 and 3,000, a total of 5,500, whereas profits are only 4,600, and interest on capital is provided only out of profits. Therefore, how would this interest be, how would the profits be distributed? It would be distributed in the proportion of this interest or in the proportion of the capitals, which would be the same thing since the same rate of interest is being applied. So what would be the amount? 4,600 would be apportioned in the ratio of, if you take this interest, 25 is to 30 or 5 is to 6. Therefore, what would be the amount? A's interest would be 4,600 into 5 by 11, 5 plus 6, and B's interest would be 4,600 into 6 by 6 plus 5. That's equal to 4,600 into 2090 and 4,600 into 6 divided by 11, which is equal to 2509. So the correct answer should be option B, 2090 to A and 2509 to B. Profits, interest on capital distributed only out of profits. Interest on drawings is A, debited to profit and loss account, B, credited to profit and loss account, C, debited to capital account, and D, none. Interest on drawings is debited to capital account. Interest on drawings is debited to capital account. It is a charge on the partners. It's an income for the partnership firm and an income for the partnership firm, but an expense or a reduction, an expense for the partner, it ends up reducing the capital account. So interest on drawings, what is your entry? Partner's capital account debit to profit and loss appropriation account. So correct answer C. Next. A, B, C are partners in a partnership firm which earned a profit amounting to rupees 1,80,000. They distributed the profit in the ratio 2:2:1. However, there was no partnership agreement on the profit sharing ratio. The necessary adjustment entry will be profit and loss adjustment account debit 1,80,000 to A's capital account 72,000, B's capital account 72,000 to C's capital account 36,000. Or profit and loss adjustment account debit 1,80,000 to A's capital 60, to B's capital 60, to C's capital 60,000. C, A's capital account debit 12,000, B's capital account debit 12,000 to C's capital account 24,000, or none of the above. So the problem here is that this 1,80,000 has been distributed in the ratio of 2:2:1. If there is no agreement, it is supposed to be equally distributed, 1:1:1. So now they are asking for the adjustment, the rectification entry, so that you can adjust this mistake that we have made of apportioning the profit in 2:2:1 ratio. What would have happened is 1,80,000, it was wrongly distributed as 72,000, 72,000 and 36,000. How should it have been distributed? It should have been distributed as 60,000, 60,000 and 60,000. Which means A has got extra 12,000, B has got extra 12,000 and C has a shortfall of 24,000. Right? So how do we adjust this? Since A has been given more, B has been given more, let us reduce their capital accounts. So A's capital account debit. Let us reduce B's capital also debit. By how much? Reduce it by 12,000, 12,000 and increase C's capital by 24,000. So the correct answer should be A's capital debit, B's capital debit, both 12,000 to C's capital 24,000. Therefore, the correct answer is option C. Mind you, in this context, profit and loss adjustment account is the account we prepare when we need to pass some rectification entries after after finalization of the accounts. But in this case, we could make an adjustment in the capital through the capital accounts of the partners. Correct answer C option. Next, in the presence of an agreement, interest on capital is to be provided from A, profits, B, capital, C, partners personally, or none of these. Interest on capital. If there is an agreement, interest on capital is to be provided out of profits. Out of profits. Correct answer should be A. If there is an agreement, interest on capitals must be provided from profits. If there is no agreement, then interest on capital need not be paid at all. Next, a partnership firm consisted of 3 partners A, B and C. If A pays 10,000 against the liability of the firm from his private funds, then what will be the entry in the books of the firm? A, no entry. B, liability account debit, partners capital account credit. C, partners capital account debit, liability credit. D, none of these. Now the correct answer here should be liability account debit, partners capital account credit. What has happened? A pays 10,000 against the liability of the firm. So the liability of the firm gets reduced. Liability account debit. 2, partners capital account is credited because the partner has paid it from his own personal funds, from his own private funds. So if he had brought in capital, we would have credited partner's capital account. This is the same effect. The partner is meeting the liability of the firm. So the entry, wipe out the liability account debit, credit the partner's capital account. Correct entry B. Next, if opening capital of a partner in the firm is 1 lakh and the closing capital is 2 lakh, interest on capital allowed during the year 10,000, interest on drawings charged during the year 2,000. If total drawings were 20,000, the amount of profit transferred to his capital account by the firm would be A, 1 lakh, B, 1,20,000, C, 1,22,000 and D, 1,12,000. The easiest in this case would be to prepare the capital account. Quickly, opening capital by balance brought down is 1 lakh. What else? Closing capital is 2 lakh. Closing capital is 2 lakh, so that becomes balance carried down. Interest on capital allowed is 10,000. Interest on capital 10,000. Interest on drawings is charged, so capital account is debited to interest on drawings is 2,000. If total drawings were 20,000, the amount of profit, drawings also we are transferring here, drawings was 20,000. This is one way of checking out what could have been the profit for the year. Closing capital is 2 lakh. So balancing figure, if we see, this is 2,22,000 is the total. $1,12,000 should be the net profit balancing figure. 1,12,000 should be the correct answer. Next one. Subject to contract between the partners, interest on capital is to be provided out of profits only. In case of insufficient profits, that is, net profits are less than the amount of interest on capital, the amount of profit is distributed in equal ratio, B in profit sharing ratio, C in capital ratio, D restricted to 6% of partners' capital account. It is not in equal ratio. It is not in profit sharing ratio, nor can it be restricted to 6% on capital. It is in capital ratio because it would be given in the ratio of the interest which is due on the capitals. Each partner may be entitled to some amount of interest on capital. Since the amount of profit is not sufficient, this profit would be distributed in the ratio of the interest which is payable, which would be the same as the capital ratio. Therefore, the correct answer should be C. Next, which of the following statements is false? A. Partnership deed is the mutual agreement between partners. D. The liability of all partners is jointly and severally unlimited. C. In the absence of partnership agreement, partners share profits in capital ratio. D. Profit and loss appropriation account is prepared to show the distribution of profits among partners. Which of the statements is false? Partnership deed is a mutual agreement. Yes. The liability of all partners is jointly and severally unlimited. True. Profit and loss appropriation is prepared to show distribution of profits. So the false statement here is C. Agreement partners share profits in capital ratio. No, they actually share profits equally. Therefore, in this case, the correct answer is C. The statement is false. C and D are the partners of a firm who share profits and losses in the ratio 5:3. D is entitled to get 5% commission. The net profit of the year is 33,600 before charging such commission. Find the share of profits of C and D. A. C 20,000, D 12,000. B. C will get 19,950, D will get 11,970. C will get 21,000, D 12,600, and the D option is that C will get 21,600 and D will get 12,000. Net profit 33,600. We get a commission of 5%. So that should be 1680. So now what is the profits we have? $31,920. This is 31,920. Either I can take 33,600 minus 5% commission, or straight away if I take 33,000, let us say 33,600 into 95% will give me 31,920 straight away. Whichever way I work out, now I've got a net profit after commission of 31,920. This has to be distributed in the ratio 5:3. 5:3 to C and D. So how much will C get? C will get this is 19,950 and this would be 11,970. The correct answer should be 19,950 and 11,970. even without computing, once we've reached this figure of 31,920, looking at the answers, there is no other figure which gives us this total. If you see 7 plus 5 is 220. 50, 70, you would get this 920 here. None of the others would have the same option. So once you reach here, in case you're short of time, you could always directly know this option. Sometimes these options are very obvious. We may not have to go through the entire computation. That is entirely up to you. Correct answer B, C 19,950 and D 11,970. The maximum number of partners is mentioned in A, Companies Act, B, Partnership Act, C, Limited Partnership Act, and D, none. The maximum number of partners is mentioned in the Companies Act. In the earlier Companies Act, it used to be 20. But as per the Companies Act 2013, the maximum number is now 100. This is as per the Companies Act, not the Partnership Act. Partnership Act does not mention anything about the maximum number of partners. Correct answer A.